Okay, good evening, everyone. Thank you for joining us here tonight. My name is Angela. I'm the Education and Training Manager at Core & Pacey. I'm joined by colleagues from HMRC tonight who are here to help you plan, prepare and take action for making tax digital for income tax. Thank you for your time this evening, HMRC. Before we get stuck into the webinar, I'm just going to do some very quick housekeeping. The webinar is being recorded and it will be available to watch back. We have had lots of questions, some along common themes such as software and tools, eligibility and thresholds, record keeping, support and accessibility, which HMRC will cover in the presentation in the first part of the webinar this evening. The second part of the webinar, HMRC will be answering your questions. The specific questions I'm sure you have around allowances and expenses and receipts rules, for example, things that we've seen already in our registration questions. For that, we have the Q&A function active tonight. So we have colleagues behind the scene managing that, and we'll try to get through as many as we can. If we run out of time, we will make sure we get answers to them and publish them. We will also publish answers to frequently asked questions on our dedicated resource page, so look out for that too. A link going into the chat just now. Chat box is open as always, but if you do have specific questions for HMRC, they are best put in the Q&A function tonight. Shout out, thank you to my colleague Sarah for supporting the webinar behind the scenes. She'll be supporting in the chat. And final point from me, we are aware of recent cyber attacks on online virtual events, such as webinars like this. We have measures in place to reduce the risk. Should we be subject to a breach, I will immediately end the webinar for all, and we will follow up with you as soon as we can by email. That might not be immediate, so please bear with us. Before we begin, there is a link being dropped into the chat to HMRC's MTD, Making Tax Digital campaign page for your reference. So you can go there and have a look if, as and when you are ready to. So I'm going to hand over now to Gary from HMRC, and he will talk you through how to get ready for making tax digital. Thank you, Gary. Over to you.
Thanks, Angela. I will go off camera whilst the presentation is running, so you don't see me in the corner and you can concentrate on the slides. First of all, I am Gary. I'm one of the stakeholder engagement leads for Making Tax Digital in HMRC, and I'll be presenting your webinar this evening. I will just share my screen and go off camera, and then I'll talk you through it. And I do understand it's going to be a lot of information, so I apologise in advance for that. Okay, hopefully everyone can see the slides that I'm currently sharing. So during today's presentation, I'll aim to give you up-to-date information to help you to get ready for when making tax digital for income tax becomes a legal requirement from April 2026, and I encourage you to join Making Tax Digital sooner. We'll start with planning for making tax digital for income tax, understanding the rules and work out who will be affected and when. I'll then explain how to prepare for MTD, discuss how to work out who does what and how you can make informed software choices. And finally, we'll go to using MTD, following the rules and considering how you can utilise any benefits and opportunities. So first we're going to look at the planning and understanding rules for MTD. From April 2026, some sole traders and landlords must use it based on their total annual income from self-employment and property. So you or your agent, if you have one, will need to use MTD compatible software to create and store correct digital records. Create and store digital records and for your income and expenses. Send quarterly updates to HMRC. make any required adjustments, and finally submit your tax return by the 31st of January the following year. At the end of the tax year, you'll be required to complete and submit your tax return using MTD compatible software. You must send HMRC information on personal income sources that you have, such as savings or dividend income, before you finalise your income tax position. Once you've told HMRC about all of your taxable income for the year, you can submit your tax return. When you submit your tax return, you will declare that the information you've provided is correct and complete, and you've finalised your income tax position for the tax year. So the plan for action. To plan effectively, you must first understand how you will be affected and when. To help with this, I'll now cover when. When MTD becomes a legal requirement, what is the qualifying income and what are the exemptions? You'll need to use MTD if all of the following apply. If you're an individual registered for self-assessment, you get income from self-employment or property, or both, and have a qualifying income that is above the threshold. And also, you qualify if you have made one or more self-assessment tax returns. MTD has been phased in from April 2026, depending on qualifying income. From April 2026, self-employed individuals and landlords with income from self-employment and property that totals over £50,000 for the 24-25 tax year will have to keep digital records, send quarterly updates, and complete and submit the end-of-year return to HMRC using compatible software for the 26-27 tax return onwards. From April 2027, self-employed individuals and landlords with income from self-employment and property that totals over £30,000, that's the next threshold, for the 25-26 tax year, will then have to keep digital records and send quarterly updates and complete the end-of-year return using the compatible software for the 27-28 tax year onwards. The following year, 6th of April 2028, that threshold then comes down to £20,000. So if your income is £20,000 or above for the 2026-2027 tax year, you will then have to keep digital records, send quarterly updates, and complete and submit the end-of-year tax return using the compatible software for the 28-29 tax year and onwards. So what is the qualifying income then? So now that you know how, where and when, we need to tell you how these dates apply. To know this, you need to understand how we define qualifying income. So your qualifying income is the total gross income that you get in a tax year from self-employment and property. All other sources of income reported through self-assessment do not count towards qualifying income. So we assess your gross income, or so-called turnover, before you deduct expenses. To assess your qualifying income for a tax year, we will look at the tax return that you submitted the year before. We'll now go on to cover qualifying income in more detail. This information is critical in terms of determining which of you will be required to use Making Tax Digital. To assess your qualifying income for a tax year, we'll look at the self-assessment tax return that you submitted in the previous year as stated. For example, to assess your qualifying income for the tax year 26-27, we'll look at the tax return that you need to submit by the 31st of January 2026. This tax return is for the tax year 2024 to 2025. After you submit your return, we'll check if your qualifying income is more than £50,000. If it is, we will tell you you must start using MTD for income tax. If you're already using MTD and start a new business, you do not need to use MTD for income tax for a new business until you submit a tax return, which includes the income from that new business. Income from a partnership does not count towards your qualifying income. If it isn't practical for you to use software to keep digital records or submit them due to age, disability, location, or any other reason, practicing members of a religious society or orders with beliefs that are incompatible, then you may be exempt. So understanding qualifying income and how it is used to determine if you're required to use MTD is key. Let's now look at how you can utilise that understanding. There are many ways in which you can check who will be affected by MTD. These include checking your current tax year information, the interactive tool on gov.uk, any HMRC letters that we send. So we'll cover each of these off just now. As qualifying income is based on turnover, you may not have to wait until you've completed your tax returns for 2024-2025 to determine if you will be legally required to use MTD. HMRC will assess your legal requirement for MTD when you submit your 2024 to 2025 tax return. This is so that you can anticipate if you're likely to be legally required to use the service and take steps to prepare. Consider the income you have already, then decide whether you're legally required to sign up. It is important for you to learn and understand these rules now. To help you determine when you're affected, we've introduced an interactive tool on gov.uk. Check if you need to use Making Tax Digital for income tax. This tool will help you understand if you need to use MTD and when you need to start meeting your new obligations. It will also set out next steps that you should take in preparing for Making Tax Digital, and it will allow you to save or print copies of the results. We're writing to all customers who may be legally required to use MTD from April 2026 based on their 2023 to 2024 tax returns. These letters will tell you if we think you're required to use MTD, give you more information about the changes, and tell you how you can get ready and be involved. We will also write to you formally to notify customers who will be legally required and what you need to do. With preparations you will have to make to begin using MTD, you should consider your current and projected gross income from self-employment, UK property and foreign property to anticipate if you will be mandated to use MTD. You may employ the services of a bookkeeper, an accountant, or both, so you would need to consider who will record the digital records using software and submit quarterly updates, and who will carry out end-of-year actions to submit the tax return. Let's talk through each of those steps to help you decide how this will work in practice. Let's begin with digital records and the ways in which you can be compliant with the digital record keeping requirements. Digital records, as a minimum, document the date, amount, and category of any income or expense for the business. You'll need to create and keep digital records for self-employment and property income using MTD compatible software to create summary totals of income and expenses by category and submit these as a quarterly update. You only need to keep digital records of your self-employment and property income and expenses, such as self-employment income, including sales, takings and fees, self-employment expenses, including the cost of stock, travel costs, office costs and financial costs, property income, including rent, premiums for the grant of a lease, reverse premiums and inducements, property expenses, including rent, cost of repairs, maintenance or other services. You will note that these correspond to the boxes on supplementary pages for self-employment and income from property. Simplified expenses can be used by sole traders, business partnerships that have no companies as partners. You can use flat rates for business costs for some vehicles, working from home, and living in your business premises. If you're sure you'll use a simplified expenses scheme, you do not need to keep digital records of your actual expenses. If you're not sure, you should keep digital records of all expenses. You can choose to categorise your digital records in less detail if you have either total UK property income of less than £90,000 before expenses, a total income from self-employment of less than £90,000 before expenses. You can do this for one or both sources of income. If you're a sole trader, you only need to record whether a transaction is income or an expense. If you're a landlord and receive rental income from residential property, including furnished holiday lets, you need to categorise your expenses in more detail. You must record if a transaction is an income or an expense, and also record whether expenses are for residential finance costs. You may need to correct an individual digital record of a transaction. For example, if you made a mistake when creating a digital record or forgot to record an expense or income you received. To correct your records, you may need to change, delete, or create a digital record. If you make the correction during the tax year, it will be included when you send your next quarterly update. If you use software that lets you create digital records, you can make the correction in your software. If you create digital records in separate record-keeping software, for example, a spreadsheet, you should make the correction there and then digitally link your records to your bridging software. You can choose to keep digital records of the disallowable portion of an expense in your software. For example, if you have a mobile phone bill which totals £200, the bill is made up of £125 for business calls and £75 for personal calls. That would be the disallowable proportion. Then you record, obviously, the latter. If you choose to keep a digital record of the disallowable portion, you should create a digital record of the full £200 expense and the £75 disallowable proportion. If you have a transaction which is part of capital and part revenue, you can either record the full value of the transaction, including capital elements. You should make an adjustment before finalising your business income, or create a digital record of just the revenue amount. For example, if you make a mortgage payment, you will need to create a digital record of either the interest or the full amount. If you create a record of the full amount, you will need to make an appointment at the end of the tax year before you finalise your income tax position. Now we're going to look at quarterly updates. It's important that you have a good understanding of the legal requirements that come with making tax digital so that you can consider how the changes impact you. There are many decisions to be made, and we want you to be as fully informed as possible when considering those decisions. Quarterly updates are unadjusted summaries of categorised income and expenses, submitted each quarter to HMRC using MTD compatible software. They are not tax returns. You're not required to make any accounting or tax adjustments before sending an update. There is also no payment required with the quarterly update. Every 3 months, MTD software will total the digital records and produce summaries for each income and expense category. You will submit these from software each quarter. The quarterly update could be as simple as pressing a button. The key considerations is who will create and maintain the digital records and who will submit the quarterly updates. This could be you, an accountant, or a bookkeeper. It's important that you understand what is involved in digital record keeping and quarterly updates, and if you already have an agent, you may want to discuss options. We're also introducing a fairer, more proportionate penalty system based on the amount of tax you owe and how long it takes you to pay it. In conjunction with thinking about who does what through the year, you will need to think about how software will be used and by whom. So making informed software choices. You'll need to use Making Tax Digital for income tax compatible software for creating, storing and correcting digital records of your business income and expenses. The software will also be used for sending quarterly updates to HMRC, receiving information such as your tax estimates from HMRC, and compatible software must also be used for submitting your end of year return to HMRC. Depending on your circumstances and needs, you may need one item of software which can do all of these things, or you may need to link multiple software products together. For example, you might have one that you use to keep digital records and sending quarterly updates, and another for sending your end of year return. If you use bridging software or multiple software packages, once you've created a digital record in your spreadsheet or software product, the digital records can only be transferred using a digital link. This means you must not manually edit or move the record within the spreadsheet to the other software if it's already been included in a quarterly update. You must not copy information by writing it out in another cell or in other software, or rewrite a record, or use cut and paste or copy and paste to move records. I'll now walk you through some examples of digital record keeping and multiple software products. Here we can see that a mandated customer has MTD compatible software and is using it to create and store digital records. At the end of each quarter, they use compatible software to send the quarterly update. This could potentially be just a couple of clicks on your mouse. If you already use a software product for self-assessment or VAT, ask your provider what their plans are for MTD for income tax. Check with your provider that this software meets your needs, and check MTD for income tax's software choice page on gov.uk. Make software choices for the whole MTD journey of keeping digital records, sending quarterly updates, and completing end of year. And the link to this is to the thinking you're doing in tandem about who does what. Keep in mind other factors, including which accounting method you'll use and whether you intend to carry out in-year adjustments. This section, sign up for Making Tax Digital for income tax, will show you who can sign up and when, and other information about signing up. MTD for income tax is currently voluntary. You may be able to sign up to help us test and develop the service. If you want to sign up at this stage, you can choose whether you want to sign up for testing early to begin using the service from April 2026, so you are prepared. HMRC will check that you are eligible to sign up based on the details that you provide. So if you want to sign up at this stage, you can choose whether you want to sign up for testing early to begin using a service from April 2026. If you want to sign up now, you'll need to submit a self-assessment tax return for the 2024-25 tax year. If you need to sign up in the future, you can either sign up to test the service now for all your self-employment and property income sources, or continue submitting a self-assessment tax return as normal and sign up at a later date when you meet the criteria. So why sign up early? You will be gradually introduced to the new processes and software, helping you plan and transition and build your confidence with MTD compatible software. You get the opportunity to help shape MTD if you're participating in testing. We're always seeking feedback and ways to improve. There will be no penalties for late submission of the quarterly updates during the testing phase. Anyone who signs up to use the MTD service in 25 to 26 will have direct access to a dedicated customer support team for MTD. The team work Monday to Friday from 8 in the morning to 6 o'clock in the evening. They're all very experienced in self-assessment and an MTD, and will be able to help with any MTD queries, any personal tax queries for yourselves that are involved in the testing programme. To sign up early, you'll need to get software that works for MTD, your national insurance number, your business start date, if this was in the last 2 years, your accounting method, cash accounting or traditional accounting liabilities, and the tax year you would like to start using MTD. You will also need your business name. This is the name you use in your invoices, your business address, and the nature of your business. Once signed up to MTD, you will have access to manage your self-assessment service. This provides useful information and many ways in which you can self-serve in real time. It allows you to view updates and deadlines, add, manage or cease a business or income source, manage your reporting frequency, see next charges that are due, you can see payments, credits and refunds, and you can see your return information. We'll now look at these in more detail. In the Manage Your Self-Assessment service, when you access the Next Charges Due service, you will be shown all payment information for your returns that fall within MTD. To view earlier self-assessment tax years, you would use your self-assessment online account. Within this service, you can now adjust payments on account immediately and make payment. The Your Updates and Deadlines service will show upcoming and missed quarterly updates, showing the periods and deadlines for each. In the Payments and Credits and Refunds service, you can get a summary of money in your account. This only shows if the account is in credit and will provide information on where the money came from, such as a payment made. When accessing the Payment, Credits and Refunds section, you're also able to check the progress of a refund request and see any credits on your account and be able to access a breakdown of each. The Returns service allows you to view your current return, showing estimated tax calculations for the year to date and forecasted for the end of year as well. This provides a breakdown of income, allowances, and deductions. The Your Business section will let you add, manage, or cease a business or income source to tell us immediately about any changes. We hope that the information in this webinar will enable you to make informed decisions about how you will comply with the requirements of MTD, using Making Tax Digital compatible software, keeping digital records, sending quarterly updates, and submitting your tax return using Making Tax Digital compatible software. Digitalising our service will bring customer benefits by reducing the error or unintentional customer errors, saving them time when they come to submit their end-of-year return, supporting wider productivity and less time managing paperwork through use of digital tools, and enabling HMRC to better tailor services to our customers. Digitalisation of business finances can reduce the burden by automating routine tasks such as invoicing and expense tracking, leading ultimately to a more efficient and accurate tax processing. Let's now have a brief summary of what we've covered. So, Making Tax Digital for income tax becomes a legal requirement from April 2026 based on tax information for the 24-25 tax year. If MTD applies to you based on your 24-25 income, you will need to get ready to begin digital record keeping and submission of quarterly updates by April 2026. This should make your end of year tax return process easier. If you sign up early, you'll have access to our dedicated support team who can help with all tax matters. Consider how you could use MTD as a catalyst for a wider change. You'll hopefully now be in a better position to plan for action and follow the readiness steps to get you ready for MTD. So here's a reminder of what they are. We started with explaining the rules and how you can work out who will be affected and when. We then explained how you can prepare for MTD, including working out who does what and how to make informed software choices. And finally, we went through using MTD, following the rules, and considering how to utilise any benefits and opportunities while complying with the legal requirements of MTD. And that, folks, is that. So thanks very much for listening. And I will pass you back over now. Thank you.
Okay, I'm just gonna pick up on the general consensus and the feeling in the chat that this is all very confusing, and what's been shared tonight is overwhelming, and not specific for childminders. So I just want to address some of those things with the HMRC colleagues now. Rest assured, as I've said in the chat, Cora and Pacey will be doing more to break it down, to make it more understandable for you. We'll engage more with HMRC to give more specific childminder relevant information over the next few months. This is an introduction to making tax digital for many people. And we do understand the anxiety that this change and this requirement is causing people. I'll start by thinking about the questions that we've seen in the chat about software. So Core and Pacey already work in partnership with Kinderly, who provide digital learning software and accounting software. You might know them, you might use them already. We are excited that they are working on a solution, Kinderly Accounts, and that will support users with invoicing, bookkeeping, parent payments, including tax-free childcare payments, and of course, making tax digital. As soon as we know more, we will be, of course, communicating this for childminders. It's a bit of a watch this space at the moment as they work on that solution. That is all I have to share on the Kinderly at the moment. I'm not versed in the other early years software apps. I think Baby Days has been mentioned in the chat, and certainly was one of the questions we had prior to it. That would be a question you'd need to ask them. You can obviously also find software providers on the HMRC site. I'm sure someone can put a link to that in the chat for you to find and look for other software providers if you don't want to wait or can't wait to see what Kinderly are doing. Okay, there are some questions that we wanted to answer live. We'll go through those now, I think. Let's start by asking, what's the rationale of HMRC having to submit figures via a third-party software provider rather than just submitting figures directly quarterly like we do annually now? There is an question for you. Who wants to take that? Lenny? Craig? Gary?
Okay, I'll do that, Angela. And first of all, I'll acknowledge the comments that are coming through. We understand that if this is the first time you're hearing about making tax digital, it does seem overwhelming. It does seem challenging. It does seem difficult. However, it is fundamentally about self-assessment. So self-assessment, many of the members will be self-employed and will operate under self-assessment. Making tax digital is just a different way of doing self-assessment. Now, the question, why do we have to do it? Why do we have to make it digital? Time moves on. The self-assessment system came in 1996. The self-assessment machinery is old and is not able to be changed and updated easily. We need to change that system, as we did for VAT a few years ago, as we'll be doing with all our taxes that we administer. We need to have a more modern, more efficient, more effective process, and that involves technology. Now, I saw many comments saying, I'm not very good on technology. We understand that. And there are exemptions for colleagues who are digitally excluded or have other reasons why it's not reasonably practical to be able to do this. However, Some people were saying they use an Excel spreadsheet. Using an Excel spreadsheet will be perfectly acceptable for making tax digital. So the three fundamentals of making tax digital that Gary outlined is that you will need to keep digital records. Now, I also saw colleagues saying they use a cash book, a Pacey cash book. Absolutely fine. All that would be required is keep your records in the cash book, and then once a week, once a month, whatever, you would transfer them into a spreadsheet. If you're keeping them in a spreadsheet, digital records in a spreadsheet, then there's a tool that's called a bridging software product, which simply connects to your spreadsheet and enables the information required to be able to be sent to HMRC. So it's just a very inexpensive piece of software that will be able to submit the information that's required to HMRC without having to. I saw QuickBooks and whatever else were mentioned. They're full accounting packages. They won't be necessary. I do not know what Kinderly are looking to have developed, but they will come to us and demonstrate what that will do, and we will provide an answer, say, yep, that looks good to us. It will do the job. That's absolutely fine. And if that is provided by Kinderly, something that you're familiar with, then perhaps some of your anxieties will dissipate. I'm looking at the chat, it's going a bit daft. Spreadsheets, you would need bridging software product. There are many bridging products available to be viewed via our software choices page on gov.uk. I see that that's been posted into the chat as well. Many of the bridging software providers and the software providers run demonstrations on their websites to show you what it looks like. Now, I fully understand that it's easy for me to sit here and say it's not as bad as you think. To you tonight, it's looking awful. I get it. So in time, bit by bit, we will hopefully reassure you that it's not as bad as you're thinking tonight. I saw someone saying, yeah, Tina, I can do that for you, possibly. I can go do your spreadsheet. Let me deal with that. So a spreadsheet for your digital records, the basics for a digital record. So today's date is the 11th of December. 11th of December, there's your date. You would then have an amount. So £54.40. Yep. What was it for? Food shop in Asda. Absolutely fine. That's the minimum that we're looking for. I get that childminders, you have a complicated food shop insofar as you're buying for your family home and you're buying for the kids that you look after. You do that just now. And you apportion the appropriate amount to family food and to food for the kids as part of your business. That is not going to change. So again, I'm looking at two places. Julie Nixon's asking, do you need to add to your receipts online? No, you don't. The receipts, you'll have software perhaps where you can scan the receipt or take a picture of the receipt and it'll upload it, and those records remain in your software. All that we will be sent is the summary total of your income and your expenses in the quarter by category. So it's not Big Brother. Today, if we had an inquiry, a tax inquiry into someone's tax affairs, we would see all the receipts. We would see all the invoices. And again, that will still continue in the future if we have tax inquiries to undertake. Making tax digital will not generate more tax inquiries for childminders. It is simply a way of providing the information that you do already for us and for many others, in a more simplified, easier form to do. I do understand many people haven't used software, but have used Kinderly. Many people haven't used spreadsheets. And if you are able to use those spreadsheets, that's fine. If you're unable to use them, then you will be able to apply for an exemption. So I'll be honest insofar as there'll be perhaps knee-jerk reaction tonight. I'm going to stop being a childminder. That is not our intention. We do not want people to leave the business because of making tax digital. There'll be a knee-jerk reaction, perhaps, of I'll apply for an exemption. But sit and think, look at the criteria, and how will you meet the criteria for an exemption? If you write in for an exemption saying, I don't want to do this, we're not going to grant an exemption. We're not able to grant you an exemption. If you say, I'm 87, pick a number. We're not going to grant an exemption simply because someone is 87. They might be an absolute digital whiz. We don't know. However, if you can reasonably show us that you don't use technology, you don't do online shopping, you don't have an online bank account, you don't buy from Amazon, you don't do whatever, your broadband might not be reliable. You might live in a remote area. If you give us all the reasons in your application, it'll be considered. And if it meets the criteria, and we can, so if you tell me my broadband's rubbish, well, we're going to check by your postal address what the broadband is like in that area. And if Vodafone, O2, or EE tell us it's pretty good, that's not going to be a good enough reason. If you're in, I don't know, Stornoway in the Western Isles, it might be a different story. We do understand this is a big change. We do understand, frankly, you're not going to like it. But our job is to try to help you to work towards where you need to be. Someone, I saw the chat, so it said something like, Coram Pacey, you need to be fighting our corner. They have fought your corner, the same as the accounting professional bodies. Every trade body has fought the corner. However, the decision has been made. This is going to happen, and we simply want to help people get there as easily as they can. I know it's words. I know it sounds, that's what you would expect me to say, but genuinely, I speak to accountants. My main job is dealing with accountants and bookkeepers. They are saying the same things that you are saying. They've said it to me for the last 5 years, but we have made inroads. It's going to be happening, and we need to help them get ready. And that's what we are doing. And we will do the same for childminders. One of our many weaknesses in HMRC is that I'm not an accountant. I'm not a bookkeeper. Equally, I'm not a childminder. So I don't fully understand what childminders do. I do understand it has been a complicated way of doing things, and it has suited, and people have been able to do it. Now, unfortunately, the agreement, which is commonly referred to the agreement, has been changed. So there was lots of questions about wear and tear and do I need to keep receipts? I don't have to keep receipts under £10 just now. That agreement is not going to apply if you're coming into Making Tax Digital. But before you start throwing things at your computers, let me try to. Debbie's not happy with that. I get that. But let me try to explain simply what that change is going to mean. So let me choose an example. Childminders go to the park in the summer and buy ice cream for the kids, or they buy something in a market from a market trader, cash basis, no receipts. You buy something secondhand, no receipts. That happens now. That will continue to happen under Making Tax Digital. All that we are asking, so presumably those are all going in your Pacey cash book. And from that cash book, you will be able to create a digital record. Could be 3 lines on a spreadsheet, could be something. I don't know what Kindle is going to bring you. It could be a familiar format, but it's just date, how much, who to, what for. It's that straightforward. That is your evidence. Now, one of the great phrases in the agreement is reasonable apportionment. That will continue under Making Tax Digital. It's just the way that you record it rather than the principle. When you do your food shop and you've got one trolley and you put it all through, I imagine that you go through the receipt and you say, that was for my house, that was for my family, that was for the kids, and you will apportion the elements from that receipt towards your business expenses. You will still do that under Making Tax Digital. The only difference is that you will make a digital record for it. Whether that's scanning the receipt, whether it's creating a digital record on a spreadsheet, it's the same thing. I know that you're going to question whether we are making it more difficult. Some people will think, yes. A lot of people have said, no, it actually makes it better once you get used to it. We fully understand. People don't like change. You've been doing something since, is it 1986 the agreement came in? So it's a case of, yeah, I'm used to this, I can do that, it's absolutely fine. Change can be challenging. Some people will say change is not always for the better. We have to accept that view. But we believe for the majority of our 3.5 million self-assessment taxpayers who will be coming into Making Tax Digital, the majority will see some benefits and it will make it better. We may have to agree to disagree, but that's what we believe, and that's what all our evidence is showing.
Lenny, can I jump in?
Of course you can.
Can we have confirmation about the 10% wear and tear and other allowances? Can you reiterate that for us so it's really clear in people's mind what they can claim on their self-assessment and how that would work, please?
Okay, so I got briefed this week by the policy team who manage the agreement with childminders. In the budget statement, it was said that the agreement will no longer will apply to those who are coming into Making Tax Digital. If you're not coming into Making Tax Digital, then the agreement will continue. So for many people, we got questions about wear and tear. Wear and tear will not be applicable in Making Tax Digital. However, in self-assessment, an equivalent to wear and tear is a capital allowable expense. So it's a slightly different way of doing it, but I fully understand childminders will understandably see your profession as a special profession, a special case, as does every electrician, every plumber, every carpenter. But fundamentally, childminders, plumbers, electricians are all self-employed. Childminders had the benefit, I understand it was a benefit, absolutely, of having an agreement. That's been changed, and you will come in under self-assessment. Self-assessment, in many ways, is very similar to the agreement. In many ways, it is better than the agreement. But I get it that you won't see that tonight, and you might not believe that tonight. In fairness, I saw a question go up there about when was Coram Pacey going to tell you this? They could only tell you when we had told them, and that had to be published in the budget last week. And then HMRC have to prepare the guidance, they have to prepare the information to come out to you. So Coram Pacey, we're going to tell you at the earliest opportunity. We offered to come onto this webinar and to take the heat. It's not Coram Pacey's fault. We are here, it's our tax, it's our process, and we will help you as much as we possibly can. Does that cover that for you, Angela?
I think so. I think so. Obviously, there's still confusion, there's still uncertainty, because this is new information for people, and I think there's going to have to be, well, there definitely will. As I've said, we'll be doing more with HMRC. We'll be doing more to unpick this for you as we learn about it too. The capital allowances that you mentioned, Lenny. It's not easy to understand. I think that's probably something we will have to do something specific on, and we will do that, absolutely. So things like that, as we learn more and understand more, we will be able to identify those specific challenges and barriers that are being faced. I just want to address a question saying, can we, Coram Pacey or HMRC, produce a list of free software that's suitable? Unfortunately, we can't. We are not accountants, we are not bookkeepers, we can't do that for you. Obviously, those people who know Kinderly, and hopefully that will provide a solution that you can trust and you can be reassured in as being suitable. There are things that we can't do, and having a list of preferred providers is one of those things we cannot do as an organisation. I apologise for that. That is out of our hands.
Angela, can I just answer the question about software? So on our software choices pages, you can filter what you're looking for. One of the filters is free products. One of the filters is for bridging software, and it will bring you the available choices, and you can make that choice. If you're already using Kinderly, then the good news that Angela shared you was that they're working towards getting an MTD compatible product. So you may wish to wait to when that product arrives, hopefully early in the new year, and certainly before April, and that might meet your needs. Other software might be able to do that. If you don't use Kinderly just now, look at the available options. And one thing I really would like to do is to say that I've seen the comments flashing up. What about the other allowances and expenses? It doesn't change under self-assessment. It doesn't change. And it's all about what we said earlier about reasonable apportionment. So if you're buying something and it's for your business and it might be used in your house, same as the food shopping, you'll do exactly what you've been doing now, because if it was reasonable under self-assessment under the agreement, for the vast majority, it will still be reasonable under Making Tax Digital. The only things that can't continue is wear and tear allowance of 10%, and that can be offset by the capital allowance. If you have to replace something, it's absolutely fine. And the other stuff, we understand that it's a very fluid environment that you work in, but it's a case of we need to be flexible, as we have been in the past with the agreement. We will continue to have that flexibility in Making Tax Digital. I fully get that the big change is going to use digital. That's the biggest change, is the digital records. And once you get your head around that, it might fall into place a little bit. So, as I say, the cash book is a fantastic record, and that's the basis of your digital records. That could be input to software, input to an Excel spreadsheet, and it can be done fairly simply and straightforwardly.
Okay. One thing I would like to address, if I may, Lenny, is early years funding. I mentioned this in preparation for tonight. So childminders receive funding from their local authority. How to put this?
Sporadically,
sporadically might be the word. Yes, not regularly, certainly in some circumstances, and without its discrepancies, shall we say. So so an income that comes from the early years funding entitlements is received by a childminder, say once every 3 months or every month, depending on where they live. And sometimes that's not right, so there'll be a repayment. How is this going to work in digital records and quarterly updates?
So you can only record a payment when you receive the payment. So if the early year funder is late with that payment, then you would only record it the day you get it, in the quarter that you get it. If it's not arrived, you can't put it in. So it may look as though the funding is irregular, and it is. It's I would love for you to be getting paid every month or every 3 months or whatever it is, but we all know that they are somewhat tardy at times. That's the reality, and we will deal with the reality of when you get your payment or when you pay an expense, that's when you record it.
There's lots of questions about taking photos or screenshots of things like the records book, for example, the accounts book, or receipts or bank statements. Is that necessary?
It's not necessary, but it could be helpful. So if you have a bank account that's for everything, for your household and for your business, that can become a little bit confusing. If you had a separate bank account, it doesn't have to be a business bank account, it can be another personal account purely for your business, then what's called a bank feed, then that could be used to reconcile your income and expenses and be fed into the software, and that makes it very simple and straightforward. Where you've got one bank account that's mixed between business and your household, that makes it more difficult because you would have to identify everything that was for your business. But again, these are solutions, potential solutions that colleagues might think about once the emotion has calmed down. I fully understand. I can see the chat. People are not happy. I get it. And they're not going to make decisions tonight. So it's a case of thinking about it, see what options are available. In time, Kindle will have a product. They may have a product that integrates bank feeds for you. Absolutely fine. But it's a case of, again, I see the chat going up. We do not. So I've still not answered about electricity. Jane, if you are getting a proportion of your electricity and household bills to support your business, that will continue in Making Tax Digital. It will be the same formula that you're applying now that you will apply under Making Tax Digital. It was deemed to be reasonable and appropriate. It's not going to change.
Okay.
And I just saw someone say they've got a letter from us to say that they're going into Making Tax Digital from April 2026. So those all taxpayers who are self-employed or landlords and have already submitted their tax return for 25-26 and they're over £50,000, if they submitted their tax return before the 31st of August this year, we sent them a letter in the first 2 weeks of November. If you haven't yet submitted your tax return, we will send you a confirmation letter after the 31st of January. But if you've done your tax return and you know you're above 50,000, then you will be coming into Making Tax Digital from April next year. Debbie Cook, I will do my very best to continue to convince you and support you to get through this.
Yeah. Just to reiterate, we are going to continue to provide and share resources and offer as much support as we can for those entering the Making Tax Digital journey in this phase, and of course for those beyond the April 2026 phase. We'll continue to engage and have discussions with HMRC to gain further clarity about business expenses, and we will formulate the FAQs from tonight into question and answers on the website. We will do that as quickly and as thoroughly as we can. And we will, of course, keep you up to date with developments, that solution that Kindle are working on. For Core and Pacey members, watch out for more in your newsletters over the coming months. If you're not a member, make sure you're following us on Facebook and we will share our updates there. There's lots of unanswered questions still, Lenny, and I doing my best to work through them. I think what might be helpful is if we compile these, get answers from HMRC and post them in writing so people can have them to refer to in an ongoing
absolutely. And again, I mean, no disrespect to people who are on the call with us. It is a bombshell for you. I get it.
Yeah.
You're not happy. I get it. And we're using language that you're not familiar with. I get it. So a capital allowance, where I've seen that pop up several times. Capital allowance is an expense that you can claim under self-assessment, under certain circumstances for certain things. You won't know that because you've not done it before. However, perhaps Core and Pacey can give you a fairly simple, straightforward explanation of situations in a childminder business where capital allowance would apply. And that may offset the loss of the wear and tear allowance. We're not saying you can't have, we're just saying you can't have wear and tear, but there is an alternative under the capital allowance scheme.
Okay. We have gone over time. I understand there is still much unanswered and confusion. We will obviously do our best to unpick it, to, as Lenny said, make it more applicable to your circumstances as childminders, make it more relevant to you. Tonight has given an overview of the Making Tax Digital system, and we have been able to answer some of your questions, and hopefully provided some reassurance, dare I say it, that it might not be as bad as you think once you've gone through some motions and you know, once you learn more and understand more. If this is the first you're hearing about it tonight, it is, as Lenny said, a bit of a bombshell. I'm Lenny, do you want to say something else?
Yeah, Maureen Wood, do we carry on doing our accounts the same until we get the letter? Yeah, it's business as usual. And I think Jacqueline was saying something, and I can't scroll up now, that was a good point. Let me see if I can get back to her. Jackie Chandler, can we still have an accountant? Would they understand all of this? If you've got an accountant, you should be having a conversation with them because they do understand all of this and they will be able to help you. Accountant's job isn't just to do your books, it's to give you advice. Capital allowances, they understand capital allowances. They should have a better understanding of your business than I do, of course, and they'll be able to advise you. We want you to have as easy a journey as possible into Making Tax Digital. We don't want you to feel that you're losing out because there may be other ways of doing what you've been doing, and an accountant is definitely a good route to go down. Gina saying, why should we have to pay for an accountant? That's their job. They can provide you advice. It may be that, you know, one person asks the question, a capital allowance in a childminder business could be quite generic. So that one accountant could provide the answer that could benefit so many of the childminding community. It's just how you're going to get the advice that you need from an accounting professional and then be able to apply that to your business. I don't know if Corey Pacey could do that, but there's time, there's plenty of time to get this in place, to understand it, and to reiterate what Gary said, we're not having any penalties in the first year in relation to the quarterly updates. We have to be realistic. Are the quarterly updates going to be perfect? Of course they're not. We understand that. But all we're asking is that we have to start somewhere and it will get better. People in all self-employed businesses lose receipts, don't get things paid on time, don't get invoices issued on time. We understand that, but it sorts itself out by the end of the year. And then an accountant comes in and looks at it, gets it better, and everybody's happy. That can continue in Making Tax Digital. We are not going to make people's life difficult. We simply want them to get a little bit better quarter after quarter, year after year. So next year it's the 50,000s coming in. The year after it's the 30,000s. They will have the same anxieties. They will have the same issues. But accountants, Corey Payson, other bodies will have a year's experience to support their members when they are coming in with 30,000 or 20,000 in 2028. We do understand it's difficult to take in tonight. We do understand it is going to be a challenge, but I will come back after the new year. Hopefully, some of you will have looked at it and some of you will say, do you know what? It wasn't as scary as it first sounded. Fingers crossed.
Okay. I think we have to leave it there. We are over time, and we will have you back, Lenny, and we will talk more and learn more and share more. I think I am going to have to close the webinar tonight for now. As I've said, we'll pull all the frequently asked questions that we've got answers to. We will get answers to the ones that we haven't got answers to, the ones we haven't been able to answer this evening. As usual, when you leave the webinar this evening, we will ask you to complete an exit survey. Do take a few minutes to share your feedback. I know you will. Your feedback is very important to us. We read it all. And yes, we know this hasn't been the answers you were perhaps looking for tonight. Hopefully, it's the start of to understand more. You will also receive an email from Zoom, which will contain the link to the recording of the webinar, so you can watch it back, and the slides. We have been confirmed that we can share the slides from tonight as well. So don't forget to look out for an email from Zoom. That will likely be tomorrow evening. Thank you for our speakers and presenters tonight. Thank you for those working behind the scenes, trying to answer as many questions as possible. I think all that's left to say is good night and have